Come on, 2, 3.
Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, March 19th, 2022. It's been another great week of shows here at the Broadcast Retirement Network, and we kicked off the week with a look at how federal regulators are looking to regulate cryptocurrency. Let's take a look.
This is really, really an important moment for crypto, for Bitcoin particularly, because Bitcoin has been touted as the future of money. So today, what we are having is that the US has taken a step to make crypto and Bitcoin legal. But people have been waiting for this for so many years, for 13 years today. And now it looks like this is going to happen. And even the way it's going to happen seems to be really in favor of Bitcoin and crypto, meaning that they're not going to be casted like illicit way of payment, illicit, the money of bad guys, bad actors. It's going to be like the money you and I can use. We can use it for for buying our clothes, to invest in, and that's really, really good news for crypto evangelists, crypto fans, and crypto enthusiasts. That's how I can describe it. Even though the prices are down, I don't believe that's the point. The point today is that almost everyone knows about Bitcoin and crypto. You have many crypto. Bitcoin is just one, the first one. And then you have more than 12,000 other what we call coins or other cryptocurrencies. But Bitcoin being the main, the main one, the one people know when they talk about crypto, they see Bitcoin. But you have other one, and I will say the most known in the crypto space would be Ethereum, because Ethereum has what they call a technology called Ethereum. And that technology, the blockchain, allow developers, to build application that you and I can use, for example, for loans, for different kind of users. So of course we know Bitcoin, but you have more than 12,000 other crypto, but you have to make sure that if you want to invest in one, you have to read what is behind, what is the project behind. Now, moving to President Biden executive order, of course, that's something that's been people have been waiting for this for many, many months. And this executive order, what it does is that instead of casting crypto in a bad way, it makes crypto or even Bitcoin like a legitimate way of thinking about money going forward. What will it look like? Could it coexist with dollar, the greenback? Of course, that's almost what Biden kind of said on Wednesday. So now going forward, how those two going to work together? How they going to coexist together? I mean, the dollar, Bitcoin, and other cryptocurrencies. That's what we have to think about, moving forward. And the US was behind. I mean, China already have a digital currency. They tried to force athletes during the last Olympics to use it, but many people were really afraid because the way they would collect data, people were afraid that even the US government told the athletes, American athletes, not to use it, because the way they would collect data, you don't know what they're going to do with data. Because at the end of the day, crypto, because of the technology, digital asset, because of the technology, the blockchain technology, every move you make is everyone can see it. They can trace it, unlike what people have heard before. You can trace anything on the blockchain. As soon as you make a transaction on the blockchain, everyone sees it. They don't know that it's Jeff or Luke, but they can see that a transaction was made that day, that time, and where from, and where is it going. And everyone can see that. So to respond to then to your question, yes, the US needed to do this, to make this move, because otherwise you will fall behind. And you can see even the way the executive orders, was kind of drafted, is talking about making sure that we don't kill innovation. So of course, the evangelists were really happy because they were expecting something that going to say, oh, this is about illicit. This is about, bad actors. This is about laundering, try to launder money. But instead of that, it was about like, let's find a common ground. Let's call all the agency and try to find out how we make sure that we don't fall behind. How do we make sure that if you and me use crypto, we're going to be protected? How we not going to be, bad actors are not going to come in and steal our investment. It was more about that. And the executive orders as well didn't talk about tax. That's been the main issue. How they going to tax it? They didn't talk about tax. There were no really details. That means that crypto evangelists or crypto actors, they will have to weigh in going forward. They will have to, they will have a seat at the table. They will say, okay, maybe this is a bad policy. Maybe we should go this way. And that's really something they were looking for, being able to have a say. That's why they are so thrilled, because it's not coming with, we have to do this, we have to do this. It's about let's think together, let's put something, together here, let's work together, and let's try to set the rules so that everyone is happy, and mostly so that the US don't fall behind. Because China, Russia, everyone is far ahead now with a digital currency.
And we also discussed the mental health and aftercare needs of those that are grieving. Let's take a look.
As funeral service professionals, and in my role as a funeral director, every day, sometimes often multiple times a day, I sit down with families who are grieving. They are experiencing different levels of grief. Although all grief has its similarities, all grief is also different. And as a funeral director, I think that we key in often on what the families are feeling, and that kind of can affect how we feel. I walk into arrangements very often for somebody, let's say an older person, somebody who's lived a long life and seen grandchildren and great-grandchildren, and the family is grateful that their loved one experienced a long life. They're grateful. They seem they're in a sense good spirits. I mean, it's good to hide as high a level as they can. And that, as a funeral director, of course, that's what we wish to see all the time. Sitting down with a family that's weighed down by grief, of course, as a funeral director, we take that on sometimes also. So one way we do, we have to channel our grief, the grief that we take on, to helping families to trying to get some sort of satisfaction out of what we're doing as helping families. And that probably helps us get through the grief that we take on. And then staying physically, getting out stress and emotion physically, mentally, things like that. We need to just we have to take a lot of time as funeral directors for self-care. Grief takes on, and I think what you're referring to, the 5 stages of grief that was created or come up with by Elizabeth Kubler-Ross. And she kind of boiled it down to sort of 5 basic stages: denial, anger, bargaining, depression, and acceptance, or in mortuary school we learned as DABDA, just to help remember it. And really, I think it's originally these 5 stages were understood as, okay, it's an order. Okay, first I'll be in denial, then I'll be angry, then I'll start to negotiate with with God or so forth about, bargain with them about extending my life or extending my loved one's life. However, I think that what they've found, and maybe what was a misunderstanding, is that some of these stages of grief happen in different order, and they happen for different amounts of time. Sometimes denial stage is brief. Sometimes denial stage is long. Sometimes we're negotiating with sort of the powers that be for a long period of time. Sometimes we're barely doing that at all. So it really just depends on the type of grief someone's going through, who's passed away, who that person is, whether they're mentally prepared and whether they've sort of coped with grief and loss before, all factors into the level in which someone will experience or the length of time they'll experience different stages. So I think that one of the most important ways to support somebody who's going through grief is it's easier than we think. I think that we try to solve things too much. We can't solve the problem. We can't make it all better. But being there for someone, just being a sounding board, listening. Sometimes it's better to be a good listener. You don't have the solution, but you can listen. You can hear what they're saying. You can hear how they're feeling. So being there for that person, that's one thing. We also find, and it's natural to sort of express this because you want to be help to the person. You want to be of service to the person. Say, let me know if you need anything. Please let me know. And you mean that sincerely. But really, it's hard to ask for help. So that person, the person who's bereaved, wants, in a sense, even if they're not saying it, they would love for you to just help them without them having to ask. So, you have somebody whose spouse dies, and the spouse was and this is an easy example, the spouse was the one who did the food shopping and cooked. So maybe you make a few prepared meals and you bring them over. You call them and say, I'm going to bring over a few meals for you. Or I made such and such. I have a big casserole. I'm going to cut it in half and give it to you so you can have for a few days. Those types of things go a long way in helping that person, relieving that burden from the person, because they're weighed down by their grief. It's not easy for them to necessarily function and go through our normal needs and functions of life because you have this burden of grief. So if you can, as a friend, as a family member, do things, help alleviate that and help them concentrate on themselves more, that's always helpful.
Well, we're halfway through. When we come back, we'll take a look at more of our top segments for the week. You're going to want to stay tuned right here on BRN Weekly.
But if you're tired of the same.
Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We also discussed a recent warning from the Department of Labor around cryptocurrency in your 401k. Let's take a look.
I think that the interesting thing here is that the administration released an executive order on the 9th, which talked about cryptocurrency, the need to regulate, and almost, how America can be a leader in digital currencies. And then you look at, the following day, March 10th, you have the Employee Benefit Security Administration put out a compliance assistance release, which is, it's a website update that is designed to, provide the department's opinion on something. And in it, they largely say that they're very skeptical of the value of cryptocurrency in 401k plans, whether they're included in a plan investment, in a designated investment alternative, so an on-plan option, or even through a brokerage window. So I think it was kind of a shock to plan fiduciaries, the regulated community, and lawyers who watch the space, because we typically aren't used to seeing the Labor Department, favoring or putting a thumb on the scale in favor of or against a given asset class. And here, the framework they've laid out would make it pretty tricky for a fiduciary to really go all in on crypto.
You can put a lot of hyperbole around this. Crypto certainly gets its share at times. But the reality is the logic in here that's here, it kind of deviates, I'll call it, from what Chief Justice Roberts always talks about calling balls and strikes type of concepts. The Department of Labor has some very, very smart people. There's not even a question in EPSA. I think the credit and acknowledgement should be given there. But at the same time, they are not the sole investment experts. We have a huge community of people about investments. And there's some who may say crypto is a great solution. There are some who may say crypto is not the time yet. But there's a continuum here. And the Department of Labor historically, in different situations, has talked about how you can approach different investments or if there's prohibited transaction issues. But this is moving away from prohibited transactions, and it's moving towards what is prudence. And prudence isn't a black and white that's set out by the Department of Labor. And that type of activity here sets us up for some real challenges. We can talk about the rulemaking rules and everything, because whether this is a website post, a blog post, however you want to call it, the Department of Labor has signaled an intent in what they published to investigate based on this. So it's more than just their opinion. And to sort of wrap that comment up, the Department of Labor at this point, what's to stop whether it is the same administration or a future administration from saying, we like active funds or we don't like passive funds or something like that, or international funds, like take, for example, funds that are in emerging markets that have been affected by the horrible war in Ukraine at this point. You take those scenarios. What's to stop them from saying, well, we're concerned, we think this is bad and this is bad? We often complain about 2020 hindsight in plaintiffs' cases. This is a similar type of discussion that could come up here. And ironically, I would argue the Northwestern versus Hughes case that I know Kevin and I have talked to you a bit about kind of points out it's not about 2020 hindsight. And so I feel like this sets a very bad precedent, especially if the Department of Labor attempts to enforce, whether or not they call it guidance. But I know Kevin may have comments, so I'll kick it back to you.
Honestly, crypto is not a major component of today's retirement system, but it is an emerging both technology and emerging asset class. And one thing that we need to be wary of is if we're trying to get Americans to a secure retirement, we don't want the system to calcify where the investment options of yesterday won't necessarily be the best investment options for tomorrow. So really today, when we look at it, most plans that provide access to crypto do it through a brokerage window, which is essentially a way for individuals who have, a sense of how they want to invest their assets. And they don't want to be limited to the options that were professionally vetted by the fiduciaries, that they can go and select off menu choices. So I think that's an area where, crypto will likely continue to emerge, but this, I don't want to call it guidance because it didn't go through notice and comment. But this, compliance assistance release could have a chilling effect on, the prudent consideration of this asset class by plan fiduciaries.
And lastly, interest rates are on the rise. Should you refinance that student loan? Let's take a look.
And the other variables out there is that there's been a lot of other things going on in the student loan industry during these 2 years, not the least of which is several very large student loan servicers have left the business and therefore transferred their loans to other entities. So in addition to borrowers losing the habit of making the payment, some of these borrowers may not be aware that their loans are no longer that their loans have transferred to another servicer. And if the borrower has moved, they may not have thought to update their loan servicer with their current contact information. So all these things together put them at a higher risk of delinquency and default, which is obviously something we want to avoid. If you go to log into your servicer and find out your loan's not there and you don't know where your loan went, you can log into the Department of Education's website, which is studentaid.gov, and that will tell you who is currently servicing your loan. On a related note, and I'm just as guilty as this these days. You pay your bills online and so on, and you don't open all your mail all the time. Maybe you don't even open your emails because, that bill's on automatic pay or it's on pause. People with student loans should be getting in the habit of opening all the things all the time, because that's how you're going to be able to keep track of when the payments are due, when you should be submitting lower payment applications if you need them, whether your loan is moved, etc. So student loan borrowers should be opening all the things. As we've mentioned, there's two primary types of student loans. There's private student loans and there's federal student loans. People ask me often, should I refinance my federal student loan into the private loan program to get a lower interest rate? And I almost always say, hell no. And the reason for that is if you refinance your federal loan out of the federal program, first of all, there's no going back. They don't do take backsies. But you lose all the federal benefits and protections that are unique to the federal loan program. Lower payment options, access to public service loan forgiveness, discharges for things like disability and death. Most, if not all of those things, are rarely, if ever, available on a private student loan. Now, if you have private student loans and are wondering if you should refinance now to get a better rate, I certainly would start looking into it now based on the fact that interest rates are likely to go up. Keep in mind that getting a lower interest rate on a private student loan through refinancing is a little bit different than refinancing another type of debt. They aren't just looking at your credit score. They're not just looking at your debt to income ratio. The refinancing companies that tend to offer the best deals are very picky. And they're looking at things, including your credit score and debt to income. They're looking at, did you graduate? What degree did you graduate with? Sometimes even what school did you graduate from? So it's always good to shop around. And if you are considering refinancing your private student loans, it's a good idea to shop around and see who might be able to give you the best deal. I am finding that more and more financial advisors are starting to take an interest in educating themselves about the nuances of student loans. It was actually financial advisors that asked me to create the student loan counseling boot camp so they could make sure they were providing the right information. But I have also seen sort of every level in between. I've seen some that say, you know what, I don't know anything about student loans and direct them to another resource. Unfortunately, I've seen some that know just enough to be dangerous and have given incorrect information to borrowers. They don't recognize that student loans as a instrument of debt are so different from the other types of debt that people in that industry may be used to. But the other thing is that up until fairly recently, financial advisors and wealth managers would tell me that they very rarely ran into a client that had student debt, and that has changed significantly. So I think that's part of the trend that I'm seeing, where financial advisors are looking to be able to, they want to be able to provide holistic guidance, including guidance on student loans, which is why they're coming to this boot camp.
Well, certainly great segments. I want to thank all of our wonderful contributors this week. And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news, that's curated news in lifestyle, wellness, finance, tech, so much more, and all in one place. I do the work, I consolidate it. check out today's edition of the Morning Pulse newsletter. Want to see our latest content? Search our archives. Well, check out our streaming partners like Amazon, Roku, Samsung, over 100 more, and of course our website, www.broadcastretirementnetwork.com. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired,
Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.